Alright, for this video I wanted to do a walkthrough of the Form 8936 Clean Vehicle Tax Credit for the 2023 tax year. And in this scenario, we're going to have a self-employed taxpayer who uses the vehicle for both business and personal purposes. And so we're going to have a bifurcation of the credit between personal use and business use. So we'll be completing Parts 2 and Part 3 here. And because we have a credit for business use, this is reported as a general business credit on the Form 3800. So we'll go through this as well as the 8936. And it is part of the full return for this taxpayer. So we've got the taxpayer's full 1040 here with Schedule C, Schedule SE. So we'll go through all those elements. And then we do have the fueleconomy.gov website up and ready here. And so we'll reference this as well. To look up the eligible credit based on the vehicle that was purchased. And then lastly, I've got one slide here covering some background on the credit and then some more details on the fact pattern itself. So if we start with what are the general issues surrounding this tax credit. So the new clean vehicle credit is for electric vehicles that are battery powered. And so there's a number of vehicles that qualify for 2023 and going forward. The best resource to look up your specific vehicle when you purchased it, the make and model, to determine what credit applies is certainly the fueleconomy.gov website, and the IRS.gov website also has a lot of good information. So the fueleconomy.gov website allows you to look up new vehicles, pre-owned vehicles, what year you bought them, when they were placed into service, and so they provide a comprehensive list of all the makes and models and how much of the credit amount is going to be available. All right, so now what are the credit amounts? So generally we're looking at a $7,500 credit. It's a non-refundable credit against your federal income taxes, and this is important because it cannot be used to offset other types of taxes, which include self-employment taxes. And so in this example, what we're going to see is the credit can be used to reduce that federal income tax liability, but the taxpayer is still going to have some self-employment taxes, and they're not going to be able to use the credit to offset those amounts. Now, basis reduction, this is really important. So if you, as a taxpayer, elect to claim this credit, you have to reduce your basis in the property, right? So if you pay $60,000 for a vehicle and you claim a $7,500 credit, you've got to reduce your $60,000 original cost basis by the $7,500. And this is designed because if you later sell the vehicle, you need to have an adjusted cost basis because you derived a benefit from the credit to reduce that. And the same issue applies, and what we'll see in this example is with depreciation. Now, if you have both a business and personal use component, your reporting gets a little more tricky, right? So the vehicle has both personal and business use. You have to separate the credit amount between those two components, right? What's most often done is percentage of business use can be determined based on miles driven, right? So if you drive 10,000 miles for the year and 7,000 is business, 3,000 is personal, then you can argue that your business use is 70%. Now, the business use credit is characterized as a general business credit. So after we calculate the amount on the 8936, it's also reported on the Form 3800. And what's also great about the business credit element is any unused credit can be carried forward. With the personal use credit, if you have a limit because of your tax liability, any unused portion cannot be carried forward, right? So what we'll see is this taxpayer has both a business and personal component. Not all of it can be used, but the unused general business portion, that credit is carried forward. All right, so let's have a look at the fact pattern here, and we'll go through Adam's kind of tax profile from an income and expense perspective, and then we'll look at the forms itself for the credit and see how all this kind of meshes together. So we have Adam taxpayer is a single filing taxpayer for 2023. He's a self-employed electrician, and so he's a sole proprietor, single member, disregarded LLC, reports all his income and expense on Schedule C of his 1040. Now in September, he bought a new 2023 Ford F-150 Lightning, and he paid $50,000 for the vehicle, and he's using it both for his business and personal use. Now, he estimates that based on the business use, he used the vehicle 65% of the time for business, and he arrived at that number by tracking his miles. So he tracked his miles, how much he drove for business, how much he drove for personal, and he came up with a 65% of the time I'm using it for business reasons. So when Adam depreciates this vehicle on his return, and we'll have a look at this, he reduces his cost basis by the $7,500 credit that he's going to be claiming. And so he did claim the $179 deduction to get a nice little write-off there. And he's also going to be claiming the business deduction for miles driven, right, using the standard mileage rate. And so we'll have a look at all those elements as well. All right, so let's have a look at Adam's 1040. So we're going to start with page 1. What you'll notice here is that Adam doesn't have any wages or investment income above. The only earnings he has during the year are going to be flowing through from his Schedule C business. So if we look at his Schedule C business, where he reports all of his income and expenses, we can see he's got the gross revenue up there from the electrician business and his various expenses. So the car and truck expenses, those are the business miles at the standard rate. He has some other expenses here, and we do have depreciation expense and 179 expense that's going to be deducted here as well. And we'll talk about this in more detail as soon as we get through the whole Schedule C. So the net amount of Schedule C income is $83,153. So that is reported on page 1 as his Schedule C income, so $83,153. And then we have deductions for QBI. We have deductions for the self-employed taxes, so the 1/2 deduction of the SC tax. So Schedule SC, we've reported the total amount of self-employment tax is $11,749, and then the deduction for 1/2 of that tax, $58.75. So if we run through really quickly, just so we can get a sense of what his net taxable income is, we've got the Schedule C income, we've got the deduction, $5,875 for 1/2 of the self-employment tax. He's claiming the standard deduction here, $13,850 for a single filer. He has a QBI deduction on Form 8995, right? That's the 20% QBI deduction. And so now his net taxable income for the year, after accounting for all those, is $50,742. Now, if we look at the taxes that he owes, the tax on his net taxable income here is $6,467. That's the federal income tax. The taxes that he owes for self-employment tax, reported on line 23, is $11,749. Now, what we'll see here is the EV credit is applied only on the federal income tax liability above. You cannot use that EV credit against other taxes, such as your self-employment tax. All right, so now let's have a look at the depreciation, just so we can see how we did everything there. So the depreciation for the vehicle report in Part 5. So we've got the 2023 Ford F-150, the date, place, in service, and our business use percentage is 65%. Now we'll see here the cost basis is $42,500, so we reduce that by the $7,500 EV credit that we're going to be claiming. But the total amount that was deducted for $179 is that lesser amount. So why is that? Well, when you have a business vehicle that's both personal and business use, you can't take a $179 deduction for the personal use portion. So we have the $42,500 and 65% is business use. So we have $27,625 available. And so we wrote off all of that as a $179 deduction. Now, for these heavy vehicles, $179 is a pretty good deduction, but it does have some of its limits, right? So the deduction in 2023 for those heavy vehicles, so 6,000 pounds of gross vehicle weight and up, was limited to $28,900 for the year for 179 purposes. Now, bonus depreciation is still available, right? For 2023, bonus depreciation was 80%. But in Adam's case here, he had enough profit, and so he was able to claim 179 deduction for the full thing versus if he claimed bonus depreciation instead, he would only have been able to get 80%. So the 179 deduction was the better choice. And in Section B here, he's reported information on the vehicle. So total business miles driven, total other personal miles, and then it rises or works out to calculate that 65% business use percentage. And then ultimately the 179 deduction is reported up here in Part 1. So we've got $27,629 or $625 of 179 expense, which is reported on line 13 here of the Schedule C. All right, so now that we've laid out all that financial information, let's go to the 8936 and look at how we're calculating the credit. So we'll start in Part 1. So Part 1, Modified AGI. We need to complete Part 1 to figure out whether or not we're even eligible for the credit based on our income. So in Part 1, we use our AGI, line 1A from line 11, which is our AGI from 2023. And then in Part 3A here, we use our AGI from last year's return. This is available to us because if our income is too high for 2023, we can look back, and if our income was lower in 2022, use the lesser amount. And that's because if you're a single filing taxpayer and your AGI is over $150,000, you don't get the EV tax credit. If it's $300,000 or more for married filing joint, you don't get it. So this exercise here is done to make sure that, okay, well, if our AGI was, let's say, 160 for this year, but last year it was 78, well, we can use last year's income. In this case, for Adam, both years are well below the limit, so this isn't going to be an issue. He's going to be able to take the credit because his income is below those thresholds. So once you've determined that you can claim the credit, you move on to Schedule A of the 8936, where you report information on the vehicle itself. So we've got a 2023 vehicle here. It's a Ford F-150 Lightning. You enter the VIN in line 2 and then the date the vehicle was placed into service. Now, question 4, they ask, was this vehicle used outside the U.S.? The answer is no, right? Adam lives and works in Florida, so it is being used in the United States. And question 5, does the VIN entered on line 2 belong to a new clean vehicle credit? And the answer is yes. So we can answer yes and then go to Part 2 of the form. Now, Part 2 and Part 3 is where we separate out the business versus the personal use. So the tentative amount of the credit here, based on this vehicle type, is $7,500. And that information can be procured from this fueleconomy.gov website. So Adam looks up the type of vehicle he got, the year, and then the vehicle credit amount based on the type, and then when it was placed into service. This is also really important. So the date that this was placed into service was in September 2023. There are different standards for all of 2024 or post April 18th through the end of the year, or Jan 1 to April 17th. So you have to be very careful to select, well, what time of year did you purchase and take custody of the vehicle and place it into service, because that's going to change the credit amounts. All right, so we know it's a $7,500 credit, and the business use percentage was 65%. So we multiply line 9 times line 10, and we get a $4,875 credit that is business use. So the amount is entered here, and it's also entered back in Part 2 on line 6. So Part 2, credit for business use, line 6, $4,875. Now, continuing on with Part 3 of the second page, we have subtract line 11 from line 9 and enter the amount here, and then enter it back up on page 1, so $2,625. So now we've got a $4,875 credit. We have $2,625 attributed to the personal use portion. So once we're at this point, line 8, we have $4,875. This is coming through from Schedule C, right? This is a sole proprietorship business, so we can report this amount on Form 3800, Part 3, Line 1Y. So if I go to the 3800 for Adam, which is the general business credit, if I scroll down to Part 3, we have current year general business credit information. And so I enter the information on line 1, line 1Y. You can see here Form 8936, Part 2. So there's that $4,875 credit. Okay, so now if I go back to the 8936, we have the total credit, personal portion, $2,625. Enter the amount from Form 1040, line 18. So line 18 is the total federal income tax liability that we have, which is $6,467. So they were looking for Form 1040, line 18, right? Line 18 is $6,467. So that amount is entered on line 10. We don't have any personal credits that are being accounted for. So we've got the 6467 on line 12. And so line 13, the personal use part of the credit that they're asking for here is the smaller of line 9, 2625, or line 12. In this case, the smaller amount is that $2,625 amount, which is the full personal use portion of the credit. So that can be reported on Schedule 3, line 6F. Schedule 3, additional credits and payments. In Part 1, we have the non-refundable credits. And so on line 6F, we have the clean vehicle credit here, $89.36, and there's the $2,625. Okay, so that takes care of the personal use portion of the credit. So now the question is, how much of that general business credit can we use? So we go back to the $89.36. The total amount is $4,875, and that's the amount that's reported on the 3800 in Part 3. So we've got the Form 3800, $4,875 is the credit amount. And so now we have to complete the entire general business credit form and worksheet to figure out, okay, well, of that total, how much can we actually claim as a credit in the current year? And then to the extent that we have any left over, that's what's carried forward. So we have Part 1, current year credit for credits not allowed against AMT, so our tentative minimum tax. So we have the non-passive credits here, $4,875. In this case, we don't have any carryovers, right? And we don't actually have any AMT issues. So AMT is alternative minimum tax. It's completed on a Form 6251. In this case, we don't have any AMT, so you'll see here in lines 7 and 8, our regular income tax is $6,467, right? That's line 18 of the Form 1040. But our alternative minimum tax, based on completing our 6251, is just $0. Okay, so we don't have any AMT issues, which is always nice, right? AMT is a bit of a nightmare. Okay, so we've got $6,467 in tax. That's our tax liability on our federal income tax. Line 10A, we don't have any foreign tax credits. Line 10B, we report the allowable credits that we have coming through from that personal use portion of the credit. So there we see our $2,625. So after the application of our $2,625, we reduce that from our original tax of $64.67, and we have net income taxes owed after factoring that personal use credit of $3,842. Now we subtract the line 10C from line 7, and we're left with $3,842. Line 13 is blank for us because we don't have any excess tax over $25,000. And line 14, we don't have any tentative minimum tax because we're not in AMT. So on line 17 here, we're entering the smaller of line 6 or line 16, right? So the smaller of line 6, Line 6 is $4,875, so that's the total business credit that we have available. And then line 16 is the actual amount of tax that we still owe after factoring in that personal use credit. And so it's going to be the smaller amount, all right, because this is, again, a non-refundable credit. So we cannot use it to get a refund other than just reduce our tax liability down to zero. So once we have the 3842 figure, move on to part 2 to figure out the allowable credit amount. Nothing applies on these line items here. I won't go through each one of them. They just don't apply for this taxpayer. And so we're left with, again, the same $3,842 figure. And so after everything is said and done, right, and we don't have any carry forwards from last year. We don't have any passive activity credits. We don't have any carryback claims. So I'm going through these kind of quickly just not to bore you, but these line items don't apply for this fact pattern. So very simply, at the very bottom, we've got the current credit allowed for the year is going to be $3,842. So once the general business credit is calculated, we report, because we're an individual, we report that amount on Schedule 3 of Form 1040, line 6A. So Schedule 3, Form 1040, line 6A, other non-refundable credits, general business credit, $3,800. Right, and so there's our $3,842 figure. So both of these amounts are attributed to that clean vehicle tax credit, right? But they're separately stated between a clean vehicle credit for personal use, a clean vehicle credit that is now characterized as general business credit. And so the ultimate, the total benefit from that tax credit, a $7,500 tax credit, we're going to be using $6,467. So that amount is reported back on Form 1040, page 2. We have line 20, amount from Schedule 3, $6,467. So our total tax, federal income tax, $6,467. We are using as much of that EV credit as we can to reduce the total tax liability down to zero. So of $7,500, we use $6,467 in the current year. Got that tax liability down to zero. But notice we still owe the self-employment tax. So the self-employment tax you owe as a sole proprietor, can't use the credit against those amounts. Now, what do we do with the excess? So the excess credit is reported on the 3800 carryover worksheets, right? So if we have a look, let me go back to the 3800 and scroll down here. So again, there's that 4875. And so here is our current year unused credit worksheet. So the amount of credit that we have from Form 8936, Part 2, the new clean vehicle credit, the original credit amount was $4,875. That was the general business credit piece. The credit that was allowed this year is $3,842. And so the difference is carried over to 2024, and that amount is $1,033. So next year, when Adam does his tax return, he's going to have to update the $3,800 to account for that carryover credit of $1,033. So that's why this bifurcation between credit and personal is so important, because the business use piece of the credit, to the extent it's not used, can be carried forward, versus personal use credits. If you can't use it all, it's done. There is no credit carryover. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next video. Thank you.